What if you knew with 100% certainty that the milk price would plummet $5 per hundredweight in the next few months? What would you do? Well, if questions like this have you thinking, you have come to the right place, because today we've got the HighGround Dairy Monthly Market Update, including the big 3 factors that are influencing your milk check right now and the strategic actions you can take to protect your business right here on the Uplevel Dairy Podcast. This is the podcast for dairy farm owners, managers, and advisors who are committed to profitability, sustainability, and excellence. I'm Peggy Coffeen, and it's my mission to bring you the conversations that will uplevel your skill set and your mindset so you can be a top performer in the dairy farming business. And here to join me today to give us an update on the dairy markets is Curtis Bosma from HighGround Dairy. He knows what matters to you because he grew up on a California dairy farm himself before cutting his teeth at the Chicago Board of Trade. And it's his mission to take the stress out of understanding markets and provide you with tools to protect your profitability. If you want to get to know Curtis a little more, click back on the most recent episode to hear why risk management matters to him and how he's planning to improve his golf game in 2024. This episode is brought to you by HighGround Dairy. HighGround Dairy provides global dairy market intelligence, insurance services, futures and options brokerage, and advisory programs to a diverse range of dairy market participants throughout the supply chain. Please note, information shared in this podcast is for educational purposes and not a solicitation to buy or sell commodities. Opinions expressed here are current opinions as of January 17th, 2024 at 12:30 p.m. and only represent the views of the speaker and not those of HighGround Dairy Trading, unless otherwise expressly noted. Here is your monthly market update from Curtis Bosma with HighGround Dairy.
Yeah, so if we talk a little bit about price action, let's first kind of outline where we're at. So right now, looking at Class 3 futures, and we'll talk about this on a quarterly average basis. As of yesterday's settlement, so January 16th, Q2 is sitting at a 17.47 average. That is down 37 cents from the prior month. Q3 is at 18.27. Q4 is at 18.34. So a pretty steep carry in that forward curve from where, some of these front month prices are at into the deferred contracts. Class 4 pricing at a higher price point at the moment. We're at a 19.52 average for Q2 of 2024. That's up 18 cents versus where we were about a month ago. For Q3, Class 4 is at 19.90. For Q4, we're up to 19.95, so closing in on $20 there. All those are up between 10 cents to 18 cents versus where they were about a month ago. If we look at the 3 big factors that are influencing milk checks right now, the first one I want to highlight is just demand headwinds. There is, not much of a supply problem that we're being faced with right now. Milk production across the big 5 exporting countries in the world is actually down about 1.3% in aggregate in October versus the prior year. The large portion of that decline is because right now Europe, from their October numbers, is down 1.9% year over year. If we think about European milk production is about roughly 1.5 times the size of the U.S. milk production. So that 1.9% is roughly 500 million pounds of milk. So that's actually slightly more milk than the state of New Mexico or Iowa produces on a monthly basis. So pretty big number when you think of, the declines we're seeing right now in European milk production. U.S. milk production, we have data through November. As of today, we've been seeing some declines there, some small declines for 5 consecutive months now, mostly highlighted in the west and southwest regions there. I know one of the big reasons behind that is just general feed costs. Feed costs for the year, 2023 were significantly higher than they have been in some recent years. And they've definitely kind of impacted the dairies in the south and southwest quite a bit more than we've seen in the upper Midwest. Demand is showing some signs of life, though. So there is some headwind. We've talked about some consumer issues with our clients over the last couple months and things going on there. I do want to touch on some bright spots here. We have seen some strong domestic demand for products like butter and cheese here in recent months, but exports have been struggling. We primarily export milk powder, so that's looking at dry whey, non-fat dry milk, skim milk powder, things like that. U.S. cheese prices are currently discounted to a lot of the other exporting regions in the world right now. So that does provide the opportunity for us to be potentially securing some export orders right now. Now, there is a lag between when those export orders would be secured and when we would see, actually delivery of that product and it having an influence on prices. So it's usually about a 3 to 4 month lag in there. So nothing to get us super excited today, but something to keep an eye on as we're moving forward here. And one of the big things that we've been tracking here lately, specifically in the cheese market, has been some of the cash and carry opportunities. For those of you unfamiliar with that, so if you are looking at any commodity that has the ability to be, stored and held in a warehouse for a period of time, and looking at the futures market for it. So if we take right now, the cheese market's, hovering around that $1.50 level. And if you go 3 or 4 months out into the futures market, cheese is trading in the futures market at about $1.70. So if it costs you just a few cents per month to hold on to that cheese, and you could sell it in a future month using that futures contract at a much higher price level, then there's an opportunity there for traders and merchandisers to pick up that physical inventory, sell the futures contract, and kind of profit off of that cash and carry trade. So that's something that definitely kind of helps add support when prices are kind of in these lower bounds like we've seen here in recent weeks. I would say, last thing that's kind of exciting in terms of the demand side for the cheese market in particular is we're starting to enter the NFL football playoffs right now. And this is typically a pretty big time for cheese demand. And so if we do see demand get boosted as we're kind of starting to see some life in these prices, it could be very interesting to see what happens over the next few weeks and months as we may start to climb out of these low price bands. So we covered some of the, demand things going on and kind of how this is not necessarily a supply problem that's brought prices to this lower level that we're seeing currently. One other interesting thing I want to cover that's been coming up a lot in recent months is looking at the U.S. cattle inventory. So the USDA is kind enough to twice a year give us an update of where things are at in terms of heifer inventory in the U.S. for milk cow replacement. From the last data we received, which was from July 1st, we saw that there was about 3.6 million head available for milk cow replacement. This was the smallest July number since 2004. There's obviously some seasonality between how many heifers are out there in July versus January. And if you look at, back in June, with the U.S. milking herd at 9.4 million head, that means that the restocking rate, so if you take the total heifers divided by the herd size, was just shy of 40% at 38.8%. That's the lowest percentage going back to 1998. So we had to go deep in the archives to find when the last time we had kind of heifers this tight. And there's an old saying in the dairy industry that when prices are high, producers should make more milk. And when prices are low, producers should make more milk. But if we're taking a look at these cattle inventories in their current situation, we're not really in quite the position to be stepping on the gas to make more milk here. We're still waiting on another update for this. So the end of January, we will get an update of where we are at through the end of 2023 in terms of an estimate for the heifer number there. But I think this speaks volumes of what's going on with the developments for beef on dairy and how a lot of dairy producers have kind of tightened down those replacement programs to kind of right size them for their operation and make sure that, they only have enough to make the milk that they need to make. And some of that also ties back to the implementation of a lot of base programs where producers are somewhat limited to how much they can produce in certain regions. And so the mantra with that has kind of become, how do we make the same amount of milk with the least amount of cows? But it's certainly an interesting trend to keep an eye on. And then my third thing I wanted to cover today was just taking a look at the utilization of milk. So if you take a look at the class 3 and class 4 market over the last several months, we've been starting to see a pretty large spread between where class 3 and class 4 futures are at. So depending on where you are, that will make a big difference in what your milk check looks like. So in the upper Midwest, where utilization of milk is roughly, 85% class 3, you're going to see potentially lower milk checks. Whereas in some regions where, there's more class 4 represented in how your milk check is calculated, prices may be a little bit higher. A lot of that class 3 and class 4 spread has been driven by what we've seen kind of regionally with U.S. milk production. We've seen a lot of additional supply come online in recent years in the upper Midwest, and that's kind of persisted through this last year, where in other regions that have been struggling with, higher feed costs and other things in the West and Southwest, we've seen production kind of tail off here. I think of specifically California, New Mexico, Texas, and some of those other states that have been showing signs of milk production declining year over year. Another factor to consider and why this class 3, class 4 spread has kind of widened a little bit is you look at the investment in the processing capacity. If we zoom way out in the dairy industry, when 2013 and 2014 happened, we had a huge focus in the milk powder space, so class 4 plants. So I think there was 5 new milk powder plants that were built in response to what happened in the markets from 2013 and 2014. Those plants came online in 2015 and 2016, and prices for non-fat dry milk collapsed down into that 70-cent range for quite a while. If you look on the class 3 side, in recent years, all the capital has been flowing in that direction. So I think currently right now, there's about $5 billion worth of projects in milk processing capacity that are committed right now. And a lot of those are kind of leaning towards that class 3 direction right now. So with more and more cheese plants out there, there's more and more cheese to be sold.
And those right there are the big 3 factors that you see influencing dairy farmers' milk checks right now. Curtis, you've given us the insights, but information is only as valuable as the action you can take with it to make informed business decisions. So, you're a strategy guy. What is the strategic move you see dairy producers taking to protect their businesses right now?
It really depends on where you're at currently. If you've looked at a lot of these different programs that are available in terms of managing your margin and haven't gotten to a point where you've implemented anything yet, now's the time to start taking a look at those things a bit more seriously and coming up with a consistent, proactive risk management plan. If you have access to some of these or you've heard about them and you've done a little bit historically, but you're not really sure what best practices are, give us a call. We'd love to kind of walk you through that stuff. We are definitely stats nerds when it comes to breaking stuff down and figuring out what's the best way to use the tools that we have available to us. And we want to make sure that every dairy producer is equipped with these tools and using them to their advantage.
And Curtis, that's exactly what you do, because the dairy farmer, they have a lot on their plate. They have a lot to know about the way that they're running their business. And you're doing this hard work for them by studying this information every day, just as you've shared with us. This is what you do at HighGround Dairy. And for those listeners out there that want more information or want to be able to tap in to the knowledge and the insights that you have on the markets, they can find all of those links in our show notes. Thank you for joining us, Curtis, and thank you to our sponsor, HighGround Dairy. HighGround Dairy provides global dairy market intelligence, insurance services, futures and options brokerage, and advisory programs to a diverse range of dairy market participants throughout the supply chain. Find the links in our show notes and head back to our last episode to hear more about Curtis, and look forward to his monthly market updates right here on the Uplevel Dairy Podcast. Thank you for listening to the Uplevel Dairy Podcast. I'm your host, Peggy Coffeen, and I'd love to hear from you. Did you find value in this dairy market update? Are you looking forward to the next one? Shoot me an email with Peggy@upleveldairy.com. Thanks for listening to the Uplevel Dairy Podcast.